Hey everyone, the automation and artificial intelligence company UiPath is scheduled to report first quarter fiscal year 2025 earnings results after the markets close on May 29th. So investors are curious, should they buy UiPath stock before it announces earnings on that date? That's the question I'll answer in this video. I'll also preview UiPath's upcoming earnings results and let investors know what they can look for from UiPath from that announcement. So let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so in its latest quarter, which they announced March 13th, the company delivered record quarterly revenue of 405 million, re-accelerating revenue growth up to 31% year over year. And the company achieved its first quarter of GAAP profitability as a public company. This follows a significant restructuring the company implemented, or cost cutting, you can call it, in late 2022 that really kept costs under control while revenue has accelerated, delivering this expansion in profitability that is only getting started, in my opinion. Cash flow from operations came in at 146 million, which, if you look at cash flow from operations divided by revenue, that's 146 million divided by 405 million. That's a really strong percentage of cash flow from operations to revenue. That's a good signal as well, especially as the cost of capital has increased and interest rates have increased. The power of generating positive free cash flow is now more valuable. Investors are more interested in companies that can generate this kind of free cash flow for a couple of reasons, and I'll just highlight two. Number one, the company can now invest this $150 million, or if it generates this amount of cash flow every quarter, it can invest in super safe government bonds that yield over 5% annually. So on 150 million, the company can generate roughly $7.5 million annually in interest income. So that's just profit that's going to come on top of the profit the company already generates through its operations. Now imagine it delivers this every quarter and it can invest those cash flows into government securities, an easy 5%, okay? But it can also do the second thing, which is give more favorable terms to its customers. If you're a company that's sustainably cash flow positive, you have the flexibility to offer your customers a more flexible payback period. So instead of telling your customer, look, we want $1 million for our service, and you have to pay us upfront or within 1 week of us giving you our service. Well, what if you can offer that same customer the same price, $1 million, but instead of having to pay you back instantly or within 1 week, you can tell that customer, look, we'll give you 90 days to pay us back. Those are much more flexible terms. That's more likely to complete a sale versus if you have to force that customer to pay you upfront or pay you in 1 week. So companies that have this sustainable cash flow, they can sometimes make those offers. Whereas if you're a company that's negative and doesn't have a strong balance sheet, you don't have the flexibility to offer those terms because you don't have the money to offer that term. If you're negative in cash flow, then you need the company to pay you quickly, because then you're going to have to go out and borrow money and pay higher interest rates and thereby make your situation even worse. So that's why in recent quarters, as the Federal Reserve has increased interest rates, companies that generate sustainably strong free cash flow have been given a premium, and UiPath is one of those. Now, the other thing is artificial intelligence. Of course, that's been all the rage in 2024 and 2023. UiPath is a unique combination of artificial intelligence and automation. And this is what management is talking about here. The combination of AI and automation is the strategic change enabler for their customers that makes any digital transformation easier and faster while empowering customers to innovate, adapt more quickly, and grow. So not only does UiPath offer these automation services, but it combines it with artificial intelligence, making it that much more powerful, that much more efficient to implement, and more accessible to a broader base of businesses worldwide. So its prospects are looking strong. So for the next quarter, management told investors to look for revenue in the range of 330 to 335 million. For the full year, they told investors to expect revenue in the range of 1.56 billion. Now, you can see that revenue is expected to accelerate throughout the year, because if you take the first quarter 330 revenue number, you multiply it by 4, that takes you to revenue of 1.3 billion. But for the year, UiPath is forecasting revenue of 1.56 billion, meaning the revenue is going to accelerate throughout the year. Additionally, they're forecasting operating income non-GAAP of 295 million, which again, if we divide the 300 million by the 1.5 billion, we get a roughly 20% operating income margin, which is a solid operating profit margin for a company in UiPath's position that is increasing and accelerating the growth rate. Solid to be sure. Longer term, investors on Wall Street that are following UiPath stock, the analysts that is, they expect UiPath to increase earnings per share by a robust 46% over the next 5 years per year. So they are expecting very strong earnings per share growth from UiPath that has only recently became profitable on the bottom line. But for several quarters, they have been improving their position, improving revenue while keeping costs under control, and they've made steps forward until finally they achieved profitability on the bottom line. UiPath is trading at a forward price to earnings ratio of 29.9, which in my opinion is a cheap valuation for a company with UiPath's prospects, its competitive advantages, its expectations over the next 5 years. I think a forward price to earnings of 29.9 is cheap for UiPath. In fact, I thought it was so cheap that I recently upgraded UiPath stock to my list of top 25 stocks to buy, and I made that upgrade on April 30th. So UiPath is one of those stocks where I feel it's undervalued enough where you can go ahead and buy it before earnings. I typically caution against buying before earnings because of the elevated risks going into an earnings release. But when the valuation is undervalued enough, I feel like there's enough of a margin of safety, I will go ahead and feel confident in doing that. But UiPath is one of those that's undervalued enough. Still, if you want to take the lower risk path, you can wait until after the earnings release, and then there's likely still going to be an opportunity to purchase UiPath stock at a reasonable valuation. Even if the stock price jumps by 20% following the earnings release, I still think the valuation will be cheap enough where you can buy it. Cheap enough because if the stock price jumps by 20%, it's likely going to be because the company has reported a better than expected revenue and earnings result and forecasted stronger than expected earnings per share. So you'll be getting more for your value even after earnings. So either way, I think UiPath stock is an excellent option for long-term investors. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.